Hey, what's up, guys? Welcome back to my channel, Stock Talk. We're here to talk about my portfolio breakdown today and just kind of go over things that I hold and why I'm holding them and give you guys a closer look as to the reasoning behind why I'm holding what I have and, you know, just kind of get into deeper detail about things. So we'll dive right into it. First two things we have are going to be Apple and ICLN, these two stocks that I'm holding. Um, these are going to create some stability in my portfolio in terms of volatility. Um, Apple, I think, as of today, or earlier, there's not today, but as of right now, is the largest market cap on the exchange. Um, and so it's going to take a lot to move the price up, but at the same time, it'll take a lot of bad to move the price down at the same time. I would still expect to see growth in this company over time, but it's not going to be you know rocket ships to the moon or anything like that. But it's also not going to be Mayday crashing down as well. Um, they're an established brand that is used worldwide that I just don't see how uh, it can go anywhere for a long, long time. Uh, ICLN is an ETF with clean renewable energy, solar, wind, things of that nature. It's had some steady growth over the past, uh, recent year, and I think our country, our world is going to have to move to a direction of renewable energy. It's just going to have to at some point in time, and I'm trying to invest in, it's pretty much a roll of the dice in whichever company you want to go for. So that's why I went with an ETF to again, you know, create stability in that growth area because you're so unsure of what could pop off in that region. So those are the control volatility in my growth. Now I have four other stocks: Aphria, Kronos, Luminar, Palantir. These four are going to be kind of my growth opportunity stocks that I think have potential. These are more of a gamble. Stocks don't always go up over time. It's just we got to wait and see what happens, kind of thing. But we'll start with Aphria. This is a weed stock based out of Canada. They're one of the more established brands in the country, and as time goes on in our country in the United States, we're moving more and more towards acceptance of marijuana sales and recreational use, medicinal use, all throughout our country. Just recently, a couple weeks ago or last week, one of the two, the House of Representatives passed the MORES Act, so it's got to go on to the Senate. Um, very, very strong chance that it's going to be denied in the Senate. However, a lot of the Republican representatives in the Senate have been getting backlash from a lot of the public about any bad mouthing they have about this MORES Act. And this is decriminalization of weed on a federal level, expunging records, things like that. Um, and I just think that our country's moving that direction. Even my state uh, just recently passed, and I live in a red state. They passed a medicinal use. I think close to half the states allow medicinal with more, um, including recreational as well. Year over year, we're just adding more and more. So at some point on a federal level, it's gonna change. It's just gonna be a matter of I think in about 10 years it'll be pushed through. That's just my guess. With that being said, I like to get in early and looking at some brands. I think Aphria has been more of a consistent establishment, a big powerhouse in terms of medicinal use and medicinal sales. Um, so we went with this one. We don't know if it's gonna. This is what I'm hoping works out long term, but we'll keep an eye in this area and see what's moving, what's not moving. Keep reading, keeping up with the news, see what's happening there. So we went with Aphria with that. Next, we'll go to Kronos Bio. This is a cancer research uh, organization that they've been working on things like reducing tumors and things like that, and they're actually I was reading this the other week about entering clinical trials in 2021 on humans for a new drug that they have. The phase 1 coming up soon in the first quarter. We don't know any results over time, but if they're successful, I imagine this could be something that is substantial for them. So I'm hopeful. I'm not 100% sure. I wanted to get into the health market, but I didn't want to get into Pfizer. Um, there's been a lot of sideways movement with that, not a lot of big jump ups from when I've started investing. But they, one thing I want to get into is gene therapy in the health sector. I think that has a lot of potential in the future. And we'll see how this plays out over the next year with Kronos. This might be one of those that I change over. I might sell it, move on to a different brand, different company that I believe in, because that's what I'm trying to invest in, are stocks that I believe in and have long-term success. So we're kind of just keeping an eye on Kronos for now and seeing what happens. Next, we have Luminar Technologies. Luminar, um, it's basically they provide software and hardware technology uh, to the automotive industry for, they call it LiDAR, basically. It's just the radars that, if you're veering off into a lane, you hear that beep, 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 and moves you back over. That's the technology that they have. Earlier this year, they have had an investment from Daimler in providing its technology to robot trucks, auto trucks. It's also been said that I think over the next 40 years, if I'm not mistaken, the truck driving industry is going to change to automotive. Getting in early, while I can. I might, in terms of chart wise, I might be getting in a little late on the short term, but I think long term effects of what Luminar can provide. I think they have contracts with 7 out of 10, global automotive brands like Toyota, Volvo, things like that. Um, I'm down right now, but long term wise, I think I'm just catching a correction, so I'm buying as it goes down. Um, I think it'll keep going up, and that's just what I'm predicting. But again, I'm just a guy, so I don't really know. Then we have PLTR. PLTR, they deal with development of data integration, software solutions. Their biggest, selling point is its ease of use of data analytics that it has for consumers and users. Basically, they simplify, complex data for people. They've had a recent contract earlier this year with the DoD, the military. They was just announced I think a week ago with a $44 million contract with the FDA. And I would imagine over more time that we see more government contracts, which I would hope that what that does is prove that its usefulness to the private sector and expand, on commercial use and commercial grounds. So we'll see with that. It's definitely a brand that I have a lot of belief in. It is kind of a meme stock. People will say, "Oh, you're just buying it for the memes and things like that." It's debatable whether I did that or not, but it's definitely one that I've looked into. I like it. I think its potential is pretty substantial long term. Pretty excited about it. We'll see what happens. And I'm just going to hold on to it long term. And then I have my last two are going to be AT&T and Realty Corp. These two are my dividend stocks. This is also going to provide some stability for my portfolio. Realty Income Group is an REIT. That's a 4% yield return per share annually. I used to hold this a couple years ago, and I'll go over that here in just a few minutes. It's pretty solid. Its movement is pretty sideways. It'll grow over time, and it has grown over time. It's proven that, and it's a solid pick. A lot of people have it. A lot of people believe in it. Long term, they've been established for years. AT&T, Some people are on the fence about AT&T. I went with AT&T because I believe they're on the uptrend, and they have a lot of room for growth of where they are. A few years ago they had basically a deal gone bad with them acquiring DirecTV. You've seen a decline over the past few years of TV uh, subscribers or whatever you want to call them. More people are going towards things like Netflix and Hulu, Amazon Prime for their video content. They don't want to see anything on TV anymore. It's cheaper to do streaming services. However, they've the CEO has talked about um, being committed to eliminating the debt that the company has, and they're going to sell out their DirecTV. They're going to sell at a loss. However, they're going to take that cash that they have and I think invest in other areas that are going to help them grow. They're going to be competitive in the 5G market. They're going to be they've started the HBO Max streaming services, and I imagine they're going to expand on AT&T's streaming uh, area. I think we're going to see more from them in the long term. So just looking at where they are right now compared to where they've been and what their potential is, it's high yield. It's still going to be around for a long time. They're going to be have to be a little innovative if they're going to continue to grow. But I'm not looking for extreme growth. I'm just looking for steady growth, and I think they can do that. That's why I hold them. So if we look at kind of my starting point, if we look at my entire starting point here, a little history. I started investing here recently back in September. About $200 I invested starting out, and since then I have put in $3,000 of my own money. So this number here is skewed because I used to have stocks a couple of years ago, and I was buying, and over time I've this right here was a buy off and a sell, or a sell off and a buy um, between a couple stocks that I had, and I sold. Um, Back then I made around $900. I got really lucky with WWE stock. It boosted me up pretty well, pretty substantially at the time. I caught them around the XFL announcement that they had, as well as the large TV deals they were gaining at the time. And just timing wise, I got lucky and cashed out at the time. I needed some capital for some other projects I had at the time. So I cashed out and sold, and then, filed my tax and all that stuff, but used capital for some other things that I needed. So I started investing again. These are going to be, again, long-term holds that I have for a long time. So as of right now, I'm really only up the 293 at this point in time. And we're going to be investing $100 a week, and we're going to be looking at what is available for the best opportunity of buying in terms of trying to keep our buying average as low as we can with what is available at the time. So that's our goal, to create growth. By the end of 2021, I want to be over 10 grand. We'll see if we can make that happen. We've been on a bull run in the entire stock market for quite some time. It's hard to maintain that kind of growth. A lot of people thought we were due for a recession this year because it's an election year, but we've seen nothing but substantial comeback after what happened in March. And so it's going to be tough to keep continuing that, and we'll see if that happens. But either way, if we do have a bear market, I'm going to be buying the entire time we're in a bear market. That's the best time to buy and accumulate, is while it's low. So, um, right now I hold 8 current stocks. I'm probably going to end up with 10 um, in my portfolio. We'll see. There are a couple more that I'm looking into, but if that happens, I'll definitely let you know, and I'll keep you guys posted. Right now I'm up about just under 10% overall so far for the year, which has only been since September. So we'll see how it goes. I appreciate you guys taking time looking at my portfolio. If you guys have any suggestions or comments, or curious about anything that what I have or holding, please feel free to ask. Let me know. And I'm going to keep you guys updated. We'll probably do this at the end of every week and see where we stand. I'll let you guys know what I bought that week, and just kind of do it like that. So thanks for your time, and don't forget to like, comment, and subscribe, as I say, right? Just kidding. All right. Thanks.